Welcome back. You're with us on Closing Bell, and our next guest on the show is Amit Jeswani, founder and CIO at Stallion Asset. Amit, hi, great to have you on. Hope you've had a good week. It's Friday, so time for some more perspective. So, just tell us, we know about some of your recent additions, and I remember our last conversation, stocks like Angel One, Zomato. So, it's probably a really healthy-looking green portfolio. But from here on, now that the mid-cap market has shown some signs of stability, are you looking at fresh deployment, new ideas, or redeploying in your current bets? What's the thought process now?
Hi, Surbi. Good afternoon. Thank you so much for having me on your show. Yes, we're looking at new ideas very aggressively because our ideas have moved up so much. We want new ideas, just that it's getting very difficult to find full tosses. So there is no easy money. So last year, I was saying that we were choosers. Today, we are beggars for ideas. So it's just moved the other way. And if we get ideas, you need liquidity. You need to act very quickly. Hopefully, we'll be at the peak. This is the start of earnings season. We're just getting started. So we don't have too much exposure towards the lending part of the business. So for us, lending season has not started. As soon as the earnings season starts.
Amit, I think we have you on a bad line. Just give us a moment. I think we'll try and reconnect and get you on better audio. But just to go back and sort of jog our memory and remind our viewers as well. So they've got a lot of the stocks that have done pretty well. I mean, and some of them are from the consumer/consumer tech space, Policy Bazaar, Zomato. These are some of the names. They actually also have Angel One. So it'll be interesting to get his take on Angel One now, considering that it's sort of the first time that we're getting a little bit of a slowdown in those numbers.
I think I remember Angel One, Amit had told us one of the interactions that they got in early, they got out and they got back in. So it's the second entry, I think, for them. So we'll wait to hear from Amit. But by the way, let's pull up a few stocks, till Amit comes back to us. Birla Soft, the stock is now down close to 4%. I'm not sure if there's some news flow there. But that one's taken a sharp dive in the last few minutes. Laurus Laboratories, I think we were mentioning on the channel as well that there is some hope that maybe they get a large order. For the time being, that's not yet come about, though the stock has seen a good run this week. It's up close to around 11% for the week. Laurus moves to the low point of the day, so keep an eye out on that one. Gujarat Gas has now done a U-turn. There was some speculation with regard to some of these stocks, but it's given up all its gains and it's moved to the low point of the day. So that's another one that's on my radar. And on the flip side, there's a stock that's up 10%. NBCC, silently, that stock is moving up. It spiked to the high point of the day. Honeywell as well moving up. So fair bit of action, guys, from the broader markets in terms of stock moves. And the one that's really holding one end up is HDFC Bank. So that's not letting the Nifty fall apart. That's saying I'm back, I'm in good form, and I'm going to hold one end up. I don't know whether Amit's back with us.
Okay, that's NBCC. That's holding out pretty well. A bunch of the infra names also. IRB, NCC. So a lot of these other stocks are also holding out. So let's do, okay, I think we do have Amit back with us. Amit, trying our luck again. So, we were just discussing this. Some perspective on Angel One will help because you've been a sort of a big bull on this one. But in the last couple of weeks, we've seen it's the first time that we're seeing a little bit of a slowdown in that client addition number, that client addition data. Does that bother you at all? How do you look at it?
Yes, of course, it bothers me. Anything that doesn't increase stock prices bothers me. We have money invested. We need to make returns. The client additions were actually not bad. They did 2.8 million client additions this quarter. In fact, last quarter, the numbers were tad bit not to my expectations because they did a lot more client additions. But $2.8 million client additions is not bad. The good part is that year over year, the order growth is 85%. Very few businesses in India that can grow at that scale. I think the only other business that will do that well, this quarter should be 65%, 60% revenue growth for Angel. Let's see, because we were not very happy with the QIP for Angel, because it's an asset-light business. It typically doesn't need so much capital, but they're doing QIPs. So we're thinking, we're just rethinking because we have 15% exposure to capital markets. We have Nuvama, MCX, Angel in the portfolio. All three have done very well. Nuvama we will hold for sure. Angel and MCX, we're thinking that what stage are we? We are in a stage where we'll make the next 50, 100%, or it'll be a 25% compound. We're just rethinking our position sizing here.
rethinking only in Angel. MCX? Do you stay put in that?
No, we see. So okay. So so the way we think about it is, if I returns are, let's say, if I buy a stock at 100 rupees and I buy 5% weight, and my target is 200 rupees. When the stock moves from 100 rupees to 150 rupees, my position size becomes 7.5%, assuming all other trades are at the same price. So my position size becomes 7.5%, but my risk reward is not the same. Like from 100 to 200, I was making 100%, but from 150 to 200, you're only making 33%. So when you're making 33%, but the risk is the same, so you have to recalibrate your position size. So this is what we are trying to think on capital market, what should be, because we've made in a quarter, in 2 quarters, we've made broadly about 80% on capital market, 70-80%, which is very good. And we had sold our financials, our lending businesses, to get into capital markets, because capital market is high beta. And to get into capital markets, we had to sell our high beta banks from the portfolio. And now we are thinking that what should be the right position size for capital markets. We will not eliminate capital markets. We'll just position size them right.
And would you look to get back into the lending, guys, perhaps in this quarter's earnings?
So if we get, if like I will personally, like if the loan growth is 1.6% quarter over quarter and MSCI is the only play, then I will not do all that. If we get decent growth rate, like we liked Bajaj's number also at 34% growth, 20,000 crore addition in AUM without 2 products. So what they have done is very well. But you need price action also. Today also the stock is down about 1%. The markets are not ready to bid up NBFCs very aggressively. Poonawalla did very well with 54% growth in AUM. So that's the fastest growing guy, but they don't have a history of credit cycles. So to make a 1-2% position is okay, but to make a 5-6% position, you need like more cycles. Like if a lender has seen more cycles, you get more comfortable in the quality of loan that they do. But as of today, the highest growth guy is Poonawalla. Number 2 would be 5-star. Number 3 would be in the larger ones would be 5-star. Would be Bajaj Finance. So we don't have Poonawalla in the portfolio. I'm just telling you for the industry. So whatever I speak about, we may have vested interest. Me, my family, my clients may or may not have positions. But we have vested interest in virtually everything I speak, and these are not recommendations.
Okay, all right. Hi, Amit. Good to speak to you after a while. What about some of these pipe makers? You know, you were positive on one of them, which is JTL Industries. It gave a good pop, and the volume growth there was quite good, at more than 40%. But now you had some kind of issue with regard to one investor that came in there on the preference issue. Are you all still invested? Have you all sold out? What is it?
We sold out. Our average selling price was 250, and we're out of.
Got it. Then give us some more new ideas then. You know, that worked well for you all. I recall in the past we've spoken about, I think, Aditya Vision, one of those stocks that you had spoken about, a couple of these other themes as well, capital market plays. What new have you all done, say, in the last 45 days or so? As you said, it's become a little difficult to choose and get new themes, but have you all found some, or have you all added on some of those existing themes?
Actually, Nigel, we're not getting good ideas, to be honest. Last we added was little Indigo in our portfolio. That was doing the block, and that was something that we were ready for. But if you ask me that, have we built very large, aggressive positions? See, we are trying with 1%, 0.5% positions. But the big position, typically that we make a very large position is on earnings season. We do not make, when we make positions, this time we have 7% cash on the portfolio, 8% cash. Every time, just before earnings season, we come on some cash. Like we sold some JTL, we sold a few here and there. But now is the time, when earnings season is the time where we start making big, large positions. And whoever executes, see, I'll tell you where we are execution-based investors. Just see every sector, Safari Industries versus VIP. There's a presentation which has come on VIP. VIP for last 6-7 years, the returns are 0%. Safari in the same time has gone up 10x. Safari every quarter was growing faster. All we have to see in our portfolio that are we in companies who are the fastest growing in their sector. And this is because we don't do B2G so much. We are mostly in consumer focus. It's a very tough quarter for consumer focus. Like in consumer focus right now, I would say I think the largest returns right now will be made in electronic retail. There are only two players here. But if summer is good, there is one player which has doubled the store count in 2 years, and that should play out. It's a small cap player, but everyone knows our positions there. So I think if summer is okay, electronic retail will be, we should do very, very, very well in the next 6-7 months there.
Sorry, I missed that. You mentioned summer retail. I missed the name that you mentioned, the company.
So there are only two listed players, EMIL and Aditya Vision. Nigel already said that we have Aditya Vision in the portfolio. So we like that as a play for next one. Yeah.
You continue to like that. And between these luggage makers, you're making the point, VIP has been a big underperformer. I did a nice interview actually with the management, and they're talking up that the worst is behind them. Do you believe it, or will you rather stick to Safari, or do you have any exposure as of now?
I will come to know if what they're saying is truth every 90 days, right? So they need to grow faster than Jatia Ji for me to be interested. So they need to grow. If Safari is growing at 20% or 25%, then they need to grow faster than Safari to regain market share. And once that happens, we'll start looking at VIP also. We are very open to changes. We are open to learning. We are open to change our positions also. But I'm just telling you that keep tracking every 90 days who's gaining. There are 71 industries in India. And in these, that we divide the market in 71 industries. And every quarter, you come to know who are the players who are gaining market share, who are the players who are losing market share. Our goal is to be invested in the guys who are gaining market share. Like Surbi was speaking about food delivery players. Now, there has been, for last 2 weeks, someone's been selling, like on WhatsApp, there's been Swiggy, financials are moving around, the 9-month data. It is very clear, that Zomato is way more efficient than Swiggy, and it's gaining market share very aggressively, not just in Zomato, but in Blinkit also. Very aggressively. I'm surprised actually looking at data.
Speaking of high growth companies, I'm not sure if you ever own Trent or if you still have it. Just tell us if you do, and just your thoughts, because that is pretty much became the definition of high growth, right? In a sector which was otherwise not really seen as very hot, talking mass retail. And then therefore your thoughts on now what the Aditya Birla Group is trying to do with the ABFRL.
Actually, till last quarter, it was our second largest position. Trend.
Okay. Why am I not surprised?
So right now, our largest position is Zomato. Number 2 is Polycab. Trent is number 3 is Policy Bazaar. I think Trent is number 4. But it is underperforming my other player bets. That's why it has moved to number 4. So they need to buckle up. But we will make decisions this quarter on Trent also. That Trent we initially got in selling our DMart at 4,200 something. And we bought Trent at 1,300, and Trent has done very well for us. So we kept looking at execution. DMart's execution was faltering. Trent was executing. We sold our DMart, got into Trent. If as Nigel asked me, will I get into VIP? If tomorrow VIP grows at 30-40% and Safari grows at 15%, we may do a
But you're happy. But you're happy riding Trent now, or are you looking to sort of maybe take some money off?
No, we will keep riding. We don't know how large a trend can get. We don't try to catch the trend top. So example, if trend was 7-8% weight initially, today trend is probably 7% weight. So we keep booking our profits to make sure a position doesn't go above 9-10% of our portfolio. That is all we do. Whenever it goes to 10%, we get it down to 8%. So it's like we never have concentrated positions of let us a player become 13-14%. But we keep cutting weights. Like we sold Trend at 2,000 rupees, 2,800 rupees, 3,000. I don't even remember prices. These are automated systems which sell. And whenever a portfolio's weight goes above a hard limit of 9-10%, we cut the weight down to 8% or 7%. But Trend has so it is an automated system. So there is no number 2. Credo Brands came with an update. This is a new IPO. It was negative. Manyavar growth is negative SSG. Shopper Stop growth is 2 or 3%. and then you have one player in fashion retail. Look at I have assuming, I'm not no recommendations, of course. We have Red Tape in our portfolio. Red Tape growth on shoe company. Red Tape growth last quarter was 29%. You see the price performance of Red Tape versus that of Campus, Bata. Bata yesterday I was seeing he was making 52-week lows, if I'm not wrong. So, and my Red Tape is making 52-week highs. So we bought these at very reasonable prices, but we are tracking execution. We are execution-based investors. But if tomorrow Bata does better than Red Tape, we'll move to Bata also.
Got it. All right. Amit, appreciate you joining in. Thanks so much for giving